Hello again. We're going to have a look now at incomplete records to be solved using the net worth method, or the so-called working back method. We've just completed some videos on describing how to do the control account method. And we recall that in control accounts with debtors, you have opening debtors, as we have in this question. At the start of the year, the debtors owe us 32,200. And at the end of the year, in the final paragraph, we see the debtors owe us 34,000. However, nowhere in the question can we find how much the debtors paid us during the year, so it's not possible to do a debtors control account to find credit sales. Nor do we have enough information in a cash account to find, or the bank account for that matter, to find the cash sales. In the same way with creditors, although we know the creditors at the start of the year, in the first paragraph, and at the end of the year, in the final paragraph. We don't, however, have any figure for the amount we paid our suppliers or creditors during the year. So again, no chance of doing a credit control account to find our credit purchases. So we've got to use a different methodology. We also know for sure that it's not the control account method by looking at this paragraph here. This confirms for us that it's a net worth method when you're told the percentage profit. So we're going to have to do the balance sheet first and then work our way back to the sales and the purchases in that manner using the 20%. So in the net worth method of incomplete records, instead of having the 6 steps we met in the previous one, we just have 3. Step 1 will be to find the opening capital and goodwill. Step 2 would be all of our adjustments for arrears and prepayments. Step 3 would be the calculation of the drawings. And using all of that information, then we do the balance sheet first. So in this video now, let's look at the calculation of the opening capital. It tells us at the start here that Fuller bought a business for €400,000, comprising those assets and liabilities. So let's take a closer look at that. The business comprised 6 assets: premises, stock, debtors, 3 months prepaid rates, equipment, and 5% investments, totaling 430,650. But the firm that was taken over also had 2 liabilities: creditors and wages due, totaling 36,900. So the net worth of that business was 393,750. Net worth 393,750, and Fuller paid 400,000 for it. So he's paid 6,250 over and above, and that's the value then that we attribute to goodwill, the attractive force that brings in custom. That extra bit that Fuller is prepared to pay over the 393,750 to get the business. Sometimes in these questions, or in these circumstances, the question may say that, for example, Fuller lodged €500,000 to the business's bank account and on the same day paid 400,000 for this business. The difference there would be that the 500,000 lodged becomes Fuller's capital, whereas in this question, the capital is the amount that he paid for this new business. Our next step then will be to do the adjustments.